Dato Seri Cheah Cheng, Mr. Louis Su, Co-Chairman and Co-Chief Investment Officers of Value Partners, Tan Sri Abdul Wahid Omar, Chairman of Bursa Malaysia, Board of Directors, Senior Management and Team at Value Partners, distinguished guests, ladies and gentlemen, a very good morning. It is my pleasure to welcome you to the listing of the VPDJ Shariah China A-Shares 100 ETF on the main market of Bursa Malaysia. My heartiest congratulations to Value Partners Malaysia. With over 30 years of investment experience, the Value Partners Group has grown to become one of the largest independent asset managers in Asia with operations across the globe. You are indeed one of the leading practitioners of value investing in Asia, with over $12 billion of assets under management and a product suite that spans equities, fixed income, real estate, and quantitative investment solutions. Today marks a new milestone for Value Partners with its listing of the world's first Sharia-compliant China A-Shares ETF. You have become a part of a group of pioneer ETF issuers that contribute towards the vibrancy of the Malaysian ETF market. Ladies and gentlemen, today's listing increases the total number of ETFs on Bursa Malaysia to 20, with a combined market capitalization of 2 billion ringgit. ETF is truly a unique investment. With a single transaction, investors can gain instant exposure to any market, region, sector, asset class, or investment strategy within safe and conducive marketplace that Bursa Malaysia offers. The addition of the VPDJ Shariah China A-Shares 100 ETF into our suite of ETF offerings will provide investors with an opportunity to gain exposure to the China A-Share market, regarded as one of the largest stock markets in the world after the New York Stock Exchange and Nasdaq. We believe this is good for Malaysian investors who have become increasingly savvier and will see this product as a means to diversify their portfolio and income. Additionally, the listing of the VPDJ Shariah China A-Shares 100 ETF is well placed to meet the growing demand for Sharia-compliant products. Not only will it add to the range of Sharia-compliant products, it also marks an important step towards enhancing the future growth of the Malaysian ETF market. Ladies and gentlemen, globally, we continue to observe the growing popularity of ETFs among investors. ETFs are favoured due to their ease of accessibility, low cost, diversification and broad range of trading opportunities. Since its debut in the early 1990s, the global market for ETFs has seen tremendous growth, with assets under management expected to exceed 36.9 trillion ringgit by 2022. Considering its rise in popularity, this listing will provide the opportunity to boost the ETF market in Malaysia. To capitalise this positive trend, the exchange will continue to take proactive steps to enhance our ecosystem to support the development and growth of new ETF products. This includes broadening awareness and visibility of ETFs among investors, as well as expanding distribution channels to make investing in ETFs more accessible and convenient. The continued support from regulators and policymakers through initiatives such as the 5-year extension of stamp duty exemptions for ETFs announced in the Budget 2021 will play a vital role in improving liquidity and trading of ETFs in the domestic market. On that note, I'd like to end by once again congratulating Value Partners and wishing success for the VPDJ Shariah China A-Shares 100 ETF. Thank you.
My company, Value Partners, has been investing in China for the last 28 years, and we're well known for our strong investment results over the long term. We're very proud today to introduce, through the Bursa Malaysia, the world's first exchange-traded fund that's Sharia-compliant and specialized in investing in securities on the Chinese mainland, meaning the stock markets of Shenzhen and Shanghai. It's a world first. We're very grateful to Bursa Malaysia for providing the platform, and we hope Kuala Lumpur will become developed as a global center for Sharia-compliant products to invest in Chinese securities. Thank you very much, Tan Sri Wahid Omar, Chairman, and Datuk Umar Swift, CEO of Bursa Malaysia, for allowing us to carry out this launch. We know that you have an important board meeting right after this opening ceremony. I also would like to thank various supporters and service providers. There are too many to mention, so I can only single out now a few key names, including Wahid Invest, Amani Advisors, CIMB, Kenaga, and Malacca Securities. Thank you very much indeed. We look forward to a very successful journey together with the Malaysian public. Last but not least, I wish to emphasize that the ETF, although designed to be Shariah compliant, is also suitable for non-Muslims because it really gives access for the Malaysian public to a basket of very high quality and carefully selected stocks in mainland China. Thank you very much again.
Bismillahirrahmanirrahim. Yang berbahagia Dato Seri Cheah Cheng and Mr. Louis So, Co-Chairman and Co-Chief Investment Officers of Value Partners, Datuk Umar Swift, and members of the board of Bursa Malaysia, distinguished guests, ladies and gentlemen, Assalamualaikum and a very good morning. Let me begin by extending our heartiest congratulations to Value Partners Malaysia for the listing of the Value Partners Dow Jones Shariah China A-Shares 100 ETF on the main market of Bursa Malaysia. We truly appreciate and commend the determination of Value Partners Malaysia for your efforts in spearheading Shariah-compliant products for investors. The co-chairman and founder of Value Partners, Dato Seri Cheah is a pioneering force in Asia's asset management industry. This Penang Free School Old Boy has earned over 170 professional awards and prizes for himself and the company since Value Partners' inception back in 1993. Such recognition and awards not only reflect the trust and confidence of the industry, but also highlight the commitment of Value Partners in embracing new areas of development and innovation. Ladies and gentlemen, for us at Bursa Malaysia, we are truly excited about this listing on 3 counts. First, this is the first Shariah-compliant China A-Shares ETF in the world, a most significant milestone for both Bursa Malaysia and Value Partners. The listing of this ETF is a welcome addition to the list of offerings on Bursa Malaysia. With this ETF, investors will gain exposure to consumer, technology, healthcare, and education sectors in mainland China, which are all key drivers of the country's economic growth. Second, this listing creates new opportunities for investors here in Malaysia to gain access and exposure to China A-Shares through a transparent, well-regulated, and orderly platform. Malaysian investors no longer have to worry about foreign regulations, tax implications, or currency exchange. Third, this new product will contribute significantly to further growing the ETF market here in Malaysia. ETF is an investment product that can meet the needs of investors, accommodate more market players, and spur the growth of the capital market. Investors are increasingly viewing ETFs as an important part of their portfolios, which provide them with exposure to developing economies, especially when investors are actively looking for returns. Ladies and gentlemen, emerging economies in Asia, especially China, continue to stand out as attractive opportunities thanks to the region's swift recovery from this pandemic. China, as we know, is Malaysia's largest trading partner with total trade of 330 billion ringgit, representing 18.6% of Malaysia's total trade of 1.78 trillion ringgit. Ever since joining the World Trade Organization in 2001, China's achievements have been truly remarkable, with its GDP growth averaging 8.7% per annum over the past 20 years between 2001 and 2020. Last year, China's economy was one of the earliest countries to recover from the pandemic, rebounding quickly and strongly to register a GDP growth of 2.3%. China is projected to overtake the US as the largest economy by 2028, according to the Center for Economic and Business Research, UK. It is encouraging to see China's equity market increasingly becoming more liberalized and more accessible for foreign investors to invest in China A-Shares. These developments and China's growing importance in global equity indices such as MSCI, FTSE Russell, and S&P Dow Jones will provide global investors opportunities for diversification, especially during these challenging periods of uncertainty. Ladies and gentlemen, the COVID-19 pandemic has seen an increasing number of investors taking a strategic approach towards sustainable investing. This has given Shariah investing much potential given the profound similarities in ethical considerations and social responsibility. With over 58 years of experience in Islamic finance, Malaysia has a well-developed Islamic finance framework and ecosystem, including a robust Islamic capital market. Over the years, value-based and ESG investing have provided comparable returns, and in some cases, better returns than conventional investments. We have also seen Shariah investing providing investors with more resilience and sustainability of returns against downside risks during times of stress. For example, the FTSE Bursa Malaysia Hijrah Shariah Index has outperformed the KLCI over a 5-year and 10-year duration. Ladies and gentlemen, today's listing of the Value Partners Dow Jones Shariah China A-Shares 100 ETF will help strengthen Bursa Malaysia's position as a global leader for Shariah listing and investments. We remain committed to work with market participants and other partners such as value partners to deliver greater choice, wider opportunity, and greater connectivity to our investors. We look forward to having more innovative initiatives such as ETFs, Shariah-compliant funds, and alternative investments that will help contribute towards a vibrant capital market in the region. And this is very much in line with Bursa Malaysia's vision to be ASEAN's leading sustainable and globally connected marketplace. We wish value partners and everyone all the best and happy investing. Thank you.
Good morning again. In this short presentation, lasting roughly 10 minutes, I will give you an overview of China's A-share market because the ETF, the exchange traded fund we are launching today, is all about investing in a basket of quality companies listed on the Chinese mainland. They have two stock markets over there. One is Shanghai, one is Shenzhen, and that's where our focus is. I want to start by telling you the A-share market is different from the market of Hong Kong, New York, Singapore. There are also other companies from mainland China listed in those markets, but our ETF is designed to focus only on the domestic market, the A-share market, which, by the way, is one of the largest stock markets in the world, but not very well known to foreigners. And most of the companies there, almost all of them, are denominated in Chinese currency, renminbi. Whereas those in Hong Kong, of course, are denominated in Hong Kong dollars, and those in New York are denominated in US dollars. By way of introduction, I myself, I was born in Penang, I grew up in Penang. I left Penang to work in Hong Kong, and in 1993, I co-founded Value Partners, which I think many of you may know is considered to be one of the most successful investors in Asia. We have a very long track record, 28 years, and we are today one of the largest asset management companies, independent asset management companies in Asia, with more than 240 performance awards since our inception. Value Partners Classic has achieved a return after fees, net fees to clients of 5,522% since inception in 1993. That's equivalent to a return of 15.3% per annum net, compounded over 28 years. So these are the credentials we bring to you in launching today's exchange-traded fund for China. The first thing to note about China is that if you invest in Chinese stocks, you are participating in the fastest growing major economy in the world. And in fact, based on various figures, the Chinese economy should overtake the US economy to become the world's largest within this decade. So this has many implications. One of them, of course, is that companies operating in the Chinese mainland, on the Chinese mainland, should be able to participate in very strong and outstanding growth prospects. And this is good for investors. Secondly, it also implies that the Chinese currency, the renminbi, will be robust. Over time, it will be strong. And this is good because from our Malaysian point of view, we are using ringgit or US dollars to buy Chinese stocks whose earnings are in renminbi. So there is also a positive currency effect. China is distinguished by a number of things. One of them is the emergence, very suddenly, very quickly, of a huge middle class. Today's middle class population in China is already 350 million people. That, by the way, is a middle class larger than the entire United States population. Based on various projections, the Chinese middle class should reach 500 million people by 2025. Now, that's a lot of middle class people spending money, creating what we call a demand chain. Demand chain is an entire ecosystem where there is enough consumer demand for products and services that allow an economy growth to be self-sustaining. This is very important in a world with so much uncertainties, that you have here a giant economy that can generate its own growth and be self-sustaining. I also think that this middle class, based again on various figures of IMF, for example, has one of the largest pool of savings in the world. And this has another interesting implication, which is that, you see, so far, much of the savings of the Chinese people have been invested in property, real estate, and bank deposits. But in recent years, we are seeing a shift in savings habits towards the stock market. This implies that Chinese stocks will continue to have a lot of buying support from their own people. And we will have a strong foundation on which to build future growth. By the way, one reason the Chinese preference for investing in property has been reduced is because of very strong government measures to curb property speculation. There are also some new rules and quotas that try to reduce the amount of buying in Chinese property. And the result has been to encourage savings to gravitate towards equities instead. The Chinese market over time has been an outperformer. You can see, for example, that in the last approximately 15 years or so, the best performing major market in the world is in fact the Chinese A-share market, as measured by the index CSI 300, which covers both Shanghai and Shenzhen. During this period of 15 years, the Chinese stock market has been able to increase by close to 800%, 852% to be precise, up 852% in 15 years. And during the same period, the US stock market has been up by 395%. This period, I chose it is because it included two major crises, financial crises. The first was a global crisis in 2008, which affected everybody. The second was a crisis in the Chinese stock market itself, which fell sharply in the second half of 2015. So you still have this very spectacular, outstanding performance, despite having gone through two crises in this period. It's also important to note yet another driver. So far we talked about a number of drivers. I'll repeat. The first driver would be China's very strong economic potential, which will allow it to become probably the world's largest economy before the end of the decade. So that will generate a lot of corporate earnings and dividends. We talk about also the emergence of the middle class and their huge savings and their reallocation of wealth away from property and bank deposits to equities. So that in itself is another major source of growth for Chinese stocks. Now we talk about another driver, which is in recent years, the opening up of China's domestic market to foreigners and investors from Hong Kong. Even up to now, foreign ownership of China's A-share market is very low. It's approximately 5%. This is abnormal. And it's only because China has been exercising a lot of capital controls. So China doesn't want to open its market too much to foreign investors. And also China doesn't allow its own citizens to take money too much out of China. Small amounts, okay. Large amounts, not okay. So it's a closed capital market. That's the story of the A-share market. Very controlled. World's second largest stock market, but so controlled that much of the buying and selling is done by only local people. But the story is gradually changing. In recent years, we have seen Chinese A-shares being included in major indices like MSCI and FTSE, Financial Times FTSE. And we think that gradually, and then of course, very importantly from 2014, China allowed Hong Kong stock market to set up something called Stock Connect, which allowed investors using Hong Kong to buy shares in China, mainland China, and investors in mainland China to buy shares listed in Hong Kong. This is a revolutionary innovation. And the result has been that we are seeing growing foreign interest and participation in Chinese A-shares. But at 5% is still too low. Giving you one example, in Malaysia, foreign ownership of stocks listed in Bursa is about 20%. So assuming China goes up to roughly the Malaysian level, not even the Taiwan level. In Taiwan, actually about 45% of the stocks are controlled or owned by foreign owners. We will see a continuous push of foreign buying support for Chinese A-shares, which will further support share prices in Shanghai and in Shenzhen. Very briefly, some statistics on the Chinese stock market. As I mentioned earlier, it's the world's second largest stock market. The market cap in US dollars is close to $13 trillion. And there are roughly 4,400 listed companies. It's a very strong market. The valuations are not exorbitant. It's actually quite reasonable. The PE of 15.7 is roughly average. And as I said, this is taking place against a background of robust economic strength, social stability, and a lot of government proactive measures to take China up to the next level of economic and technological development. I was very impressed, for example, to find that in China now produces more university graduates, about 9.5 million college graduates per year, than any other place in the world. They're way up front. They are almost neck to neck with the United States in the number of international patent applications. There are various other statistics. China's gross domestic product per capita has now more or less caught up with the Malaysian level, almost on level. And this is a country that used to be really terribly poor. So their progress is impressive. Last but not least, let's talk a little bit about the ETF we are launching today. The full name is Value Partners Dow Jones Shariah China A-Shares 100 ETF. In simple language, it's an exchange-traded fund that invests in the Sharia-compliant selection of 100 companies in Shanghai and in Shenzhen. I have the full list of companies in front of me. Basically, there are companies involved in manufacturing, in consumer products and services, green energy, healthcare, education, transport, all the usual suspects. But they're carefully selected for quality and also making full use of Value Partners' expertise and experience. The portfolio is rebalanced every quarter, and it's the only listing for it is Bursa Malaysia. So you want to buy or sell it, you must go through our Bursa. And that concludes my presentation. Thank you very much.